All right, today on The Explainer, we are shedding light on securitization, its benefits and risks to listed companies. And Professor Uche Owaleke joins us now from our Abuja studio. Good evening, Professor Owaleke. Securitization, what does it mean?
Yeah, good evening, Chimezie. Compliments of the season.
I wish you same.
Securitization. Yes, securitization is the process of converting income-generating assets, be they loan receipts, be they lease rentals, into securities that are traded on a securities exchange, into tradable securities. So securitization is simply the process of creating what is called asset-backed securities. And it is one thing that, if it gains footing in Nigeria, will go a long way in deepening the capital market, especially for its variants, the mortgage-backed securities. It will go a long way in unlocking the potentials that we have in the housing sector. This is one sector that we have been told has as much as 17 million housing deficit. Now, back to the point, permit me to describe it for want of time in very simple terms. The simple conventional structure of securitization usually starts when a company identifies some income-generating assets that it wishes to take out from its balance sheet. It wishes to realize very quickly and to gain liquidity. So the company now pulls these assets. I've given examples earlier. They could be loans, that is loan receipts, or lease rentals, or credit card balances, or whatever. Now pulls them into what we refer to as a reference portfolio. Okay, so the same company now transfers this reference portfolio, or sells them, if you like, to an investment firm or a firm set up specifically for the purpose of issuing them as securities, known as special purpose vehicle or special purpose entity. So the special purpose entity buys them from this company. This company, by the way, is referred to as the originator. So the special purpose entity collects these assets, from the originator, that is the reference portfolio, and then structures them, into various classes. Most of the time, that's what happens, into senior securities, junior securities, and so on. That it has a purpose. I will come to that later, and then issues them to investors as securities. So investors take them up and, of course, become entitled to interest payments and, of course, the principal repayments. So that's securitization in its simple form. Of course, it has a lot of benefits. From the point of view of the originator, the company doing that, of course, it will put the company in a position to get more liquid, to raise funds almost immediately. In the case of banks, for example, it puts the bank in a position to even make more loans. Because when a bank pulls its loans into a reference portfolio and sells them, it frees up the bank from liquidity constraints, and then enables the bank to be in a position to make more loans. On the part of the investor, it's an opportunity, a very good opportunity to diversify the investments, especially given the fact that asset-backed securities, if you have them in a portfolio, don't usually correlate directly with the other investments or other securities you have in the portfolio. So when you have a portfolio that has negative correlation, as it were, of course your risks are minimized. So it's an opportunity to diversify portfolio. For the government, it also has some benefits. Remember I said it's about securitizing or collateralizing receivables. The government too can decide to collateralize any self-liquidating assets, any receivable or any asset that has a cash flow, a steady cash flow. Collateralize that, raise some funds, and use those funds to finance especially infrastructure. If you look at what is happening in China, for example, China and Japan, they have been using collateral securitization to finance some infrastructure projects, especially road projects. So in China and in Japan, Hong Kong, what they do is they securitize the toll revenue, securitize for the purpose of maintaining expressways. Italy too, uses securitization a lot, especially when it comes to again, infrastructure, which is why in recent times Italy keeps updating its securitization law and promoting real estate investment trusts, which is also a variant of a securitization. And recently too, we had in Malaysia is setting up a real estate investment firm. They're calling the Airport REIT for the purpose of again expanding the airports. REIT, by the way, REIT, means real estate investment trusts. Okay, so there are securities that are issued by companies that own and operate, if you like, income-generating, properties. And of course, in Nigeria, the REIT culture, if you like, hasn't really been entrenched. Since 2007, we have just managed to register just 3 REITs. Yes.
Professor, may I come in there? I mean, we've talked a lot about the benefits. I'm sure this securitization would, of course, have its risks. So what are the risks there?
Okay, 2 major risks I want to identify. The first is credit risk. Credit risk, just as with every lending, the risk that the original borrower of the loan, may default. And then prepayment risk. Prepayment risk has to do with the risk that the investors, may decide to, pay back, or the borrower may decide to pay back the loan, earlier than expected. So that disrupts the cash flow of the securities. So these are the 2 risks: credit risk and prepayment risk. And usually what happens is that to mitigate these risks, asset-backed securities come with credit enhancers. Credit enhancers in the nature of guarantees by the issuer, guaranteeing both the principal and the interest repayment, as well as credit rating. Okay, and one way to mitigate the risk of prepayment risk is to cut the, to structure the reference portfolio into tranches, in such a way that you're taking into consideration the maturities, the interest rates of the various loans, when, as you have grouped them. And then because they have different risk exposure, of course, they also attract different level of returns and yield and credit rating. So the senior tranches, for example, will have low risk and, of course, lower yield than the junior tranches.
All right. Thank you very much, Professor, for making us understand that word, securitization, in the capital market. We do appreciate your time. Professor Uche Uwaleke is a professor of capital market at the Nasarawa State University. Thank you very much for your time this evening.
My pleasure, Chimeze. Thank you very much.